Good evening and welcome to Money Matters. I'm David Ebner with Merrill Lynch, and my co-host this evening is Brian Kohute with HJ Wealth Management. Hey, Brian.
Dave, how are you?
Always great seeing you.
Same here.
We have a great show tonight, Brian, and I can't wait till we get to our guests. But before we do that, let's talk about the market. The market has obviously come off of its lows pretty dramatically here, much to the chagrin of most of the naysayers. What's your firm's take on it, and how are you advising your clients?
Yeah, I mean, we feel pretty good. I mean, I think, as you know, we're long-term bullish on the market, so we feel good about it. I mean, everybody was waiting for this big correction in last year, 2013. We're obviously in 2014, but this show is taped. So, we have a bit of a correction, a little bit of rotation, probably good for the overall market. So, we think it's still a good opportunity, for the investor.
Yeah, I find it very interesting, and obviously we live in a world where we have mass media and instant information, right? And people react to that information instantly, sometimes correctly, most of the times incorrectly. Yes. But from our study of the equity markets and the bond markets and even the real estate markets, the long-term trend is a cycle, right? You're going to have up cycles and down cycles, and really positioning investors in a strategy that they can take advantage of either cycles is really the most important thing to do. Yeah,
I'm sure you see this as well. Like, it's still amazing the client having that conversation. When should I get in? It's like, well, where were you 4 years ago? When you really should have got in, right? So
they were listening to CNBC and a little too scared to get in. I think at that point.
I think so. I mean, so again, if you have a long-term plan, you got to pick your entry point and stick with it. You can't be shaken out every time the market goes up and down. So.
Yeah, and I think that the thing that as advisors we need to focus our clients on is really their time horizon.
Right. Yep.
Depending on what your time horizon, what happens in the next 6 months, 12 months, a year, 2 years, 5 years may be meaningless if you're investing over a 10, 15, 20, 30-year time horizon.
Right, and good point on the high-frequency trading that's getting all the press to our clients. It's meaningless over the long term. I certainly wouldn't want to be a day trader against those guys, but for our clients that have long-term asset allocations, and we have a term we call sit in your seat. If you can sit in your seat with your allocation, you don't even have to worry about CNBC.
There you go.
Right?
That's right. That's right. And I think high-frequency trading is actually computer, so you're not even going against guys.
That's right. Yeah. You're going against the biggest and fastest computer that money can
bits
buy.
Of information.
Right?
Well, rates are interesting because obviously the Federal Reserve has had a very low interest rate policy for a very long time, and we have got a new Federal Reserve chairwoman, Janet Yellen, and it looks like she's going to continue this policy for the foreseeable future. Is this a good thing or is this a bad thing?
Yeah, I guess time will tell, right? So, I don't think there was a show that went by last year we didn't talk about the taper. When are they going to do it? Now we're kind of here. They started it, and oddly enough, rates are starting to go down, right, because of the uncertainties with the global market. So nobody knows the outcome, right? So markets will dictate where we go. I think you believe, like we believe, rates will be up in the future. They can't be down here forever. So at some point,
yeah, absolutely. Obviously, if we have just your basic mean reversion, we're going to have higher interest rates. One of the things I talk a lot to my clients, and I'm almost sound like a broken record because it hasn't happened yet, is with all this liquidity, right? With all this extra money in the marketplace, it creates inflation. That's well understood in economics that when you print money, many countries have fallen apart because of high inflation.
Sure.
So it's inevitable that we're going to see inflation. Hopefully we don't see hyperinflation, but we have printed a lot of money and we've kept rates very low. We're just not seeing the velocity of that money. But it's a matter of if not, as opposed to when.
I mean, the money has to get deployed, right? I mean, you can't earn zero with inflation, right? The negative real return. So we all know it has to happen. It's just going to be when, and it'll come. And I think that's what we're all worried about: is can the Fed really manage the inflation side of the equation? Right?
Yeah, yet to be determined, right?
Yet to be determined.
Don't fight the Fed is probably.
We'll be talking about it on the show.
Yes, we will. Stay tuned. Well, now let's talk about international versus U.S. Is one better than the other? Where do you guys?
Yeah, it's a global economy. We all know this, right? So it's hard to say. Well, the U.S., which looks like the best candidate right now, looks like it has it's led us out of this mess, and it looks like it has the best opportunity. But if you were all U.S. based, you would have given up a lot of return in the last 10 years, right? So, emerging markets got killed last year. International didn't do as well as the U.S. So we still believe you have to have a global allocation. The world's too connected to avoid it. And then just maybe you pick around the margins. Do you feel better about the U.S.? We feel a little bit better about the U.S. In this cycle, but I think Europe's kind of seems like it's settled down and going forward. And at some point, emerging markets will be a big opportunity.
Yeah, international has to be part of a portfolio. You cannot ignore it. And I think it's funny because you take companies like Coca-Cola. Coca-Cola does a majority of their business outside of the U.S. Right. U.S. is not their primary market anymore. It hasn't been for a decade. I think when I speak publicly about international investing and people are down on it, and I say, well, does anyone like Budweiser? And a few hands go up, and I say, well, it's not owned by Anheuser-Busch here in the States. It's actually owned by AB InBev, which is an international company, and that's really the focus of the future. And we travel more. Our children are more aware of the other cultures, and emerging markets, I think, is an enormous expansion in the economy. You're watching all these people go from subsistence living to really a low class or a middle class living, and that's really going to create more consumerism globally.
You're going to see Africa coming online here, right? Which
Absolutely.
is unbelievable. And
it's unbelievable.
Yeah, and we said this. Probably 10 years from now, there won't be a international versus U.S. It'll be I have a global portfolio because I don't know where the company's based or where their revenue comes. It's just is it a solid company that can grow? I want to own it.
That's fantastic. Well, we have a question before we get to our guest, if you're ready for it.
I'm ready.
We have Ralph Yellen from Wayne. He says, what economic ideas should you watch closely to help with good buys in the stock market?
Well, Ralph, I don't know if you're related to Janet, but you probably get a better answer from her. But I'll give you my answer. To me, right now, it's all eyes on the unemployment rate. And I guess, now the more popular participation rate, who's actually looking for jobs. For this economy, again, I believe we're in a bull market cycle, as you mentioned. Jobs have to come online. We have to create jobs for this to continue to go, right? So that's the number I'm looking at.
Jobs matter. I think there's a lot of economic data out there, and
Tons
I think obviously jobs are definitely something you want to key in on. I also think you want to look at company earnings. That really means a lot when companies make money, and when they bring money to the bottom line, that really shows that the companies are expanding and obviously the economy expanding. So there's a lot of data out there, but it's always please contact your financial advisor or CPA before making any investment decisions from our experts that we bring on the show. But if you have a question, please send it to 205 East Levering Mill Road, Ballackinwood, PA 19004, or email us at moneymatterstv@gmail.com. And we'll get somebody as expert as Brian here to answer that question for you. So I'd like to welcome tonight Scott Messer, the CEO of Sales Evolution in Philadelphia. Welcome to our show, Scott.
Thank you for having me.
How are you?
So Scott, why don't you tell us a little bit about your background and more importantly about your company, Sales Evolution.
Sales Evolution is a sales improvement company, and the two things that I think distinguish our work really from just about everybody else in our space are that we take an anti-sales approach.
Okay.
Do you like being closed by a salesperson? Brian, do you like being?
No, I do not. I don't even answer that phone.
Your prospects don't like it either, so don't do it. Yet most of the methodologies train to that. The second thing is that the body of work, I think, in sales is tremendous. The books, the training programs, the webinars, et cetera. It's vast, it's deep, and it's great. But how many really good salespeople do you know? And if you're a business owner or executive, how many do you have on your team out of the number of salespeople you've got? Most people say not too many. The question then becomes, what's the gap between this vast amount of great material and so few good salespeople? And we've figured out that the answer is that left to their own devices, people can't do it by themselves. So we offer extensive individual coaching, working with all these salespeople on their deals to help collect decisions, and that's how they learn the material the best.
So can anyone be a good salesperson, or you really look at the traits they may have?
Everyone cannot be a good salesperson.
Okay.
But they can be improved. If you consider sales a profession? A profession can be trained. Now, you may be better or worse, but you can be taught.
Good professional, bad professional. When you say, so you're coaching and you're different from what's out there, right? The Zig Ziglars of the world and so forth. Are you that different from that? Set your prospects, drip on them, or contact them. What process makes your company different than, as you said, the vast amount of information that's out there?
Well, at the core, guest-free selling, which is what we call our methodology, really is no different from any of the others.
I'm sorry, you called it what?
Guest-free selling.
Guest-free.
Not
Guess.
Guess. No guessing.
Oh, right. Guest-free. Guest-free. Okay, gotcha.
Guest-free. Imagine if you could have conversations with your prospects where everyone was comfortable enough to tell the truth.
Okay.
Wouldn't that be a better world?
Yes.
Yes, it would. And when you take the close out of the process, that gets people comfortable enough to reveal their true goals, intentions, the outcomes that they really seek. Because if you think about your own prospects, you're both in the financial service world, they're not looking to buy stocks or bonds or annuities. They're looking for financial security, things with their family, perhaps. I mean, who knows
peace
what?
Of mind.
Peace of mind.
Absolutely.
They can get stocks and bonds anywhere, and as long as you're comparing we're 1% cheaper than the other guy,
right?
And here's why we're great, founded in 19 whatever,
right.
etc. Nobody wants to hear that anymore. Today's buyer has changed dramatically. They know what they want, and we teach people to stay out of the way and let them buy it.
That's great. What's the hardest part, speaking of that, of selling?
The hardest part in sales, I believe, is what we call relationship management. Now, most people think of relationship management as me talking to you and great tie, looks very springy today, etc. Everyone's socialized to a degree to be good at that aspect of relationship management. The most difficult part of selling is dealing with the relationship that we have with ourselves. It's the voice in our head saying, you can't say that, you can't do that. They'll get angry with you. I don't like talking about money. I can't call on big companies. And that list is endless. The show's not long enough to go through that list.
Right. So it's a psychological, you're working really on the psychological aspects of the salesperson. You're not necessarily teaching them techniques on how to sell or how to, again, going back to basic sales, always be closing or something along that line. What actually, are there some key factors that you hone in on?
Sure. First of all, there is a process.
Okay.
For organizations that don't have a sales process, we can provide it. And again, it's going to be very similar to anything else that's out there. For companies that already have one, we can lay on top of that because, again, the work really is inside the head of the sales people. Yes, we teach a lot of techniques and try and give them the occasional silver bullet, try this, do this, because at its core, sales is about human nature. And we've got even some international clients. And I was on the phone with some folks from Mexico today. The human condition is the same everywhere. Mm-hmm. And what applies here applies everywhere. I don't know if that's a fair answer to your question, but that's...
Sales and marketing always seem to get lumped together. Is it fair to put them together? And part two is, do you need a strong marketing program to have a strong sales culture?
That gets an it depends, because different sized companies have different requirements. There are companies that are all about lead generation, getting them to the salespeople and getting them out in the field. On the other hand, if you're in a low volume of transaction business where you need a new client a month, one a quarter, two a month, whatever, I don't know that investing heavily in your website
is going to drive business there. Correct.
Right.
So that's where you don't get involved with the marketing side at all. You're purely on the sales force side.
We get involved because, as Brian said, the phrase is sales and marketing. Right. But let's make sure we have some quick definitions of what the difference between the two is. For me, and again, the audience may take issue, but marketing is about generating interest.
Right.
Sales is taking that interest and helping your prospect make a decision. Notice I didn't say sell them or close them, but make a decision that is in their interest because people buy for their reasons, not yours, as a salesperson, and move on.
Well, with that, are you predominantly in the service industries? Are you on the product industries? Because definitely selling something like professional services, legal services, or whatever is a lot different than selling a car or selling an airplane or something to that effect. Wouldn't you agree or no?
I disagree, and I apologize.
No, it's fine. No, you're the expert.
Don't flip the table.
Yeah, you're the expert. I'm not. I'm just saying. In my mind, it would be. I don't do either, so
Sure.
I don't know.
Well, let's come to some quick conclusions. If you can agree that the sales process is the same no matter what you sell, I mean, similar to it's income tax time, we all fill in the same form no matter what business we're in.
Okay.
And so it is in sales. The sales process is the same. For a complex sale, there may be some additional steps, and we have to stretch it out over a longer period of time. For a simple sale, we can compress it. It's skipping steps that's death to the sale.
Okay.
So from that perspective, it's the same. Additionally, people are the same. And if we can agree that people are buying for their reasons, and it's the human condition that drives people to make these kinds of decisions, people are the same in every industry.
Can you walk us through these steps you're talking about?
Certainly. If we were to strip down every sales process out there from the 250-page book to the 5 core pieces, it would be investigation, which some people call discovery or qualification, which is followed by authority. Most people think of authority as who, which is important, but even more important, do your buyers know how to navigate through their companies to get it done? I find with many of our client salespeople that they get people that are interested who have never bought that kind of product or service before, and they just don't know how to get it done. So authority is who and how, followed by investment. And investment is much more than just money. In fact, the single biggest investment any executive makes is the political investment that they make when they bring in a new provider, a new product or service. They are putting their personal prestige on the line. It better work. And few, if any, salespeople deal with that particular issue. Personally, I deal with it every time because that's the thing that blocks the sale probably more than anything. Followed next, of course, by presentation. And last, what everybody calls proposal, we call agreement. And the difference between those two things is this. A proposal is a guess. Here's what I think you're willing to buy, how much I think you're willing to pay for it, etc. A proposal is a guess. An agreement is a promise. It's a commitment between both parties. Here's what we have agreed to do mutually. So at the end of the day, your prospect may or may not sign off on the agreement, but there won't be anything in it that you haven't talked about that would lead them automatically to say no. And through those 5 stages, there is relationship management and expectation management. And the reason those 2 things run north and south where the 5 points run east-west is because they're in every phase of the sales process.
Now, you had mentioned a term, I think, before, relationship selling versus challenger model. Or what's the difference?
Well,
and which one do you prefer if there is a clear winner? So.
Well, when we poll our client company salespeople in the beginning, I always ask them how many folks here consider themselves to be relationship salespeople, and almost every hand
right.
goes up.
Loaded question.
It is a loaded question, but if you really consider it, your competitor salespeople are nice salespeople too, and they work for reputable companies, and they've got good products and services, and they're going to be competitively priced. So relationship, the personal relationship that they're referring to when we ask them that question, it's nice, but you've had good relationships with a lot of people that didn't buy from you, that stayed with their current provider or went to no decision. And the reason that is that at the end of the day, it's the business relationship that comes first. The personal relationship comes second.
Does the product or service work? Is that what you're saying?
Yes. To simplify it, it has to meet their needs and their requirements. But again, I think usually most everybody's products and services work reasonably well. So if you're in a competitive situation, we work with some people that sell PVC pipe, talk about a commodity.
Seems like it.
Sure. I'd like 10 trucks containing 3 miles worth of pipe. I mean, it's...
Right.
How does one company get an extra 2 cents a pound over the other? There's a trust factor and a certainty factor that comes in that when you craft the right kind of conversation and have the right kind of understanding with your prospect, you become the safe person to do business with because you understand they're not buying the pipe. They're buying, not having to work overtime like they have been. They're buying, they've missed their kids' last 3 soccer games and their husband or wife, whichever spouse it is upset with them. They're looking for a raise. They don't want the president of the company to come down and yell at them again. I mean,
but that would be a situational, right? That would be, they've already had that situation. If you have an ongoing relationship with it, and let's stay with the PVC maker here, what will generally happen is the longer the relationship, the bigger the order, right? The the owners on the other side of the construction company are going to say, well, where can we cut costs? Can we get costs here or there? Even though it's a great relationship. And unless they run into a situation that the new PVC company, 2 cents a pound doesn't seem like a lot of money, but when you're building...
It does on 1 million pounds.
Absolutely. when you're building towns, it comes into real money, as they say. And when we build multiple towns, it comes into very real money. Then there's a push there. Now, the salesperson doesn't have any leverage in that particular situation unless the new company, let's say they are undercut, because it's a competitive world, right? I think cars are not bought anymore by car dealers or car salesmen. People look online, they figure out how much they should pay for a car, what kind of car they go, and then they go to the dealer, and they know more than the salesperson probably on the floor. And that probably goes with most products and services.
I'll answer your question this way. First, your products and your services are free. That is not what your customer is buying. Because everybody, take that $1 million worth of PVC. None of it's going to leak, ostensibly. Hopefully. It's a spec product.
Right.
On an order that size, everybody's going to be priced within...
pennies of each other, as you just said.
Pennies of each other. It's not a question of how much does it cost when it works. How much does it cost when it doesn't work? Okay. How much does it cost when there's a late delivery? How much does it cost when there is an off-spec load? How does the how does the supplier handle? I mean, there's just a lot that goes into it.
Which I'm agreeing with you, there is, but I'm saying that that's situational. I mean, in essence, it's sounding like what you're saying is this is almost the death of the salesperson, right? Because it's no longer the need for, hey, my product is just as good but cheaper than this guy, or we can deliver faster, better, or whatever. It's more of, let's have this relationship. As long as I don't mess this relationship up, it will stay in perpetuity. But that's not real world. Real world is on the other side of that equation. That person's getting pressure to cut corners, right? Increase profit margins. I mean, we get it every day. I mean, obviously in the financial sector, we've seen it dramatically in the last 4 or 5 years.
There's somebody in every organization that understands the difference between price and cost.
You hope. You hope there's somebody there, is what you're saying.
Well, is everybody a prospect?
Absolutely.
Absolutely not.
Okay. Okay.
Here we go. I presume...
This is where you have to find the right person, is what you're talking about.
Well, in your business, financial services, I don't think you're short of prospects. everybody literally can use your product or service. But there are some best fit clients.
100% agree.
So people that don't get it don't qualify. And that's
easy enough.
That's where it goes. I'm not going to deny the reality of price buyers, but when I talk to our clients, again, early on, first I ask the how many of you like being closed question, of course.
No one likes it.
No one likes it. And the next question I ask is, how many of you buy everything on the basis of lowest price? And of course, no one raises their hand. Every now and again, somebody will raise their hand, and I just ask them what kind of car they drive, do they live under a bridge?
Right.
Okay, so when no one raises their hand, I ask this question. How'd you find every one of them in your territory?
Right.
That's remarkable.
Right.
Give yourselves a round of applause. You know, let's have a cheer for you, because you found every single price buyer.
Right, in your area.
And the reason these buyers default to price, it's a knee jerk, is because the salespeople are not having the right conversation in the first place.
Okay.
And for the interest of time, I'm just going to have to ask you to.
It's an interesting subject, obviously, and I would agree with your theory that no one likes to be sold, right? None of us, and it really should be a part of an agreement, and that's a nice way of putting it.
Yes.
I'm just not, again, there's a plethora of sales and marketing or sales techniques
Absolutely.
out there. And I mean, this seems to me to be, again, another technique, if you will, to sell. And I'm not sure if that's 100% in the real world. Again, your example of the PVC. I mean, obviously, if you could give us a real life example, that would be more poignant.
Sure. In fact, on my LinkedIn profile,
Great.
The headline reads, client wins $6 million order without quoting price.
Wow.
It is a wow. And what happened is this is a specification manufactured product. $6 million is a lot of it. And it's not unusual for distributors, my client's a distributor, to go to the manufacturer and say, I've got a prospect who's interested, I need a price. And depending on the product or service, it can be quite an ordeal to put all that together.
Sure.
Then you're talking about multiple plants, manufacturing itself. It was a big deal. And we knew that the manufacturer was going to come back and say, come on, we've heard this before. So through the coaching, which again is really where the action is. It's not so much the quote training, end quote.
Sure.
Training gives us a common language and a common
it's the
process
coaching that pushes you through.
From which to coach. We decided to approach the end user customer with this approach, which was, you have to give us a range of what an acceptable price is, number one. Don't say it's got to be this. Give us a range so we can go back and negotiate on your behalf.
So you came up with, so clearly the process works for you, and it worked. And unfortunately, Scott, we've run out of time, and we're going to have to bring you back and go over this, because this is a very interesting topic, and I think it's very appropriate in the world that we live in today. But please, people, reach out to Scott and his organization. This is really fantastic. Our next week's guest will be Cheryl Pegas, a doctor and president of Kohute Corporation, which is a healthcare consulting practice. Also, we'd like to welcome our iTunes and Stitcher radio listeners. Money Matters is now available as an audio podcast on iTunes and Stitcher Radio, listed as Money Matters, the podcast, for your mobile device. The video is available on YouTube channel as well as our website, which is money-matterstv.com. And if you are interested in topical information about money and Your Money Matters, see us next time on Your Money Matters. That went too quick.